Good afternoon and welcome this afternoon to ThinkScript with the thinkorswim platform. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend James Boyd. I'm filling in today for my other good friend, Michael Fairborn. Both 20 plus years veterans of the financial markets. James is there to help answer questions today. And we're going to talk a little bit about ThinkScripting today. Now, I'm going to say right off the bat, I am not the ThinkScript maven or guru that Michael Fairborn is. Probably not even the ThinkScript guru that James Boyd is. But we're going to talk a little bit about what that means and some of the ways that, in fact, we can create ThinkScript if we are not maybe the greatest coders in the world. And how we might use some of the tools that are here on the thinkorswim platform to be able to create that ThinkScript. So that's an important part of this discussion. A couple of quick housekeeping items, though, as we get into this discussion. Remember that everything we talk about is simply for illustrative and educational purposes only. Remember that any of the symbols that we look at are for illustrative and educational purposes. If we talk about options, remember that equity and index options carry a high level of risk. They are not suitable for all investors. Make sure you're aware of the characteristics and risks of standardized options before you consider any option strategy. So be aware of that. Also, we're going to use some technical analysis concepts in this discussion today. Schwab doesn't recommend the use of technical analysis. The sole means of investment research. It's not a guarantee of future success out there in the real world. We're going to be using the thinkorswim desktop software platform here today, specifically the paperMoney version, which is a good learning environment. Doesn't tell you the future, doesn't guarantee future success. And it's important to remember, especially when talking about ThinkScript, that there are some things that the live trading platform does that the paperMoney platform will not do, especially when it comes to things like ThinkScripting, when it comes to utilizing ThinkScript in a study and elsewhere. There are some differences. So be aware of those differences. Also, of course, remember that past performance and security or strategy doesn't guarantee future results or success. The other thing is, if we happen to share anything, if I share any scripting or scan queries or anything else that we've created, remember that those shared items are not guaranteed as to time or accuracy. They are not recommendations, and your mileage may vary with them. So let's jump into the discussion here today. And I wanted to just kind of give you a sense of what the problem was that I was presented with, what the challenge is that kind of got me thinking about this particular discussion. And what I started thinking about was the fact that in today's market, given what's going on in the market, given the upward move, if we pop over here to, say, for instance, our index grid, we've had some movement. SPX gapped up and then sold off a little bit. Today, we saw a gap up and a sell-off, a little bit more downward movement in the NASDAQ, a little bit of a gap down. So nonetheless, with all of this movement in the indexes, that's creating movement in individual stocks. Plus, we're in the middle of earnings season, like dead solid in the middle of earnings season. And so that's bringing with it some price movement. We saw price movement and some big moves in Meta and Microsoft this morning following their earnings announcements. So the kind of challenge that I was presented with in putting this together is simply this: how do you find stocks? How do you look for and qualify stocks that are breaking out, that are seeing movement relative to a range? And I've got a couple of different studies that other people have created. I've got a watch list column built around a study that Michael Fairborn and Ken Rose previously had created. I know that it's something that James uses, is something that you have asked about. But in identifying this visually, it's easy to see where price has maybe broken out solidly, especially over here on the hard right edge, because we can see, kind of sideways movement. We can draw lines and identify levels of support and resistance in terms of making decisions. But quantifying that, being able to make that a scripted identifier on the chart, meaning maybe painting an arrow or painting a dot on the chart, that becomes a whole different story, because now you have to start getting into defining what is it that you're trying to accomplish? What is it you're trying to see? So I thought that this particular example, and when I saw this happening on Caterpillar today, not that this is an illustrative example necessarily of a phenomenal breakout, but it is. I mean, we're starting to see a little bit of a movement above a recent resistance level. This is a very typical scenario that traders are faced with when price is going sideways and then price breaks out of that range. This goes back to the methodology we teach when it comes to technical analysis, which is if this, then that. If price breaks this resistance, then do something else, wait. So my thought was around, well, what if I could create an area that points out, what if I create a ThinkScript study that would point out on the chart where that breakout was occurring? Therefore, I could look for that visual identifier and be even that much more efficient in determining where that breakout might be or what is going on, right? So whether it is looking back at previous moves and then putting that on the chart, painting that on the chart, or it's looking at what's emergent right now, that's where kind of that scripting study might be helpful. Now, use this thought process and kind of the definition of what the problem is as an illustrative example. I'm not saying that you only have to build scripts around looking for breakouts or looking for breakdowns, but this is kind of the challenge we're presented with. So we're going to use this as the metaphor for maybe other types of studies. So I go to my watch list, and I've got this watch list built, and I've got this watch list column titled Breakout Column. And I'll share this with you. I'm glad to share this with you. But the one thing I noticed is if I click on my gear icon here on this watch list, and it's a watch list column that is a custom column that I could put in here. This one, the Cahold, you're probably familiar with. You've probably seen it before, because I think many of those breakout type studies or those bounce type studies, including this one, came from our good friend out there in the chat, James Boyd, right there. But it's this one that I've got that is the one that was created by Michael Fairborn and Ken Rose. And so if I click on the script scroll right here, so I went to my column header and I clicked on that script scroll right there, and I'll be happy to share this with you. Again, I'm going to click on share, and I'm going to click on share, and then I'll put it down here where there are a lot of shares right there. And remember, anytime we share anything like that, it is for illustrative and educational purposes only, not guaranteed as to time or accuracy. But I'm sharing that column header with you right there. But I look at the ThinkScript that's involved in this particular tool, and it's pretty involved. And I'm like, boy, do I really want to write or start to edit that amount of script? I don't, to be honest. I'm happy using, and I like using ThinkScript tools in my daily routine and in the processes that I use, but I'm glad when somebody else writes it as opposed to me writing it, because this would take me a long time to write this ThinkScript. So I thought, well, maybe there's another way that we could accomplish this. We could accomplish the same thing. And so that was the challenge that I set for myself, was see if we can write something that looks for a breakout, but it doesn't require me, at least at the outset, to write or edit a lot of ThinkScript code. So I picked one of these examples here in this particular watch list. So it's a stock with a fair amount of volume, better than 1 million shares average daily volume or current trading volume. And the characteristic is that I'm looking for here is a breakout. So it's showing me a positive result on that breakout column information that is presented in this watch list. And I came across this one, which was Caterpillar, just at the top of the list. And that's the only reason I chose it. For no other reason did I choose Caterpillar, other than it happened to be alphabetically at the top of that list that were included in those breakouts, the ones that are giving me that positive breakout flag. And so I came to this particular picture where that stock is sitting above this range where it's been kind of running into that resistance for the last 3 or 4 days in this case. Now, granted, it's got an earnings announcement. I'm not worried about that. I'm not worried about the fact that there's an earnings announcement out there. That's exogenous to what we're trying to figure out. So to be fair, probability trader, I don't care that there's an earnings announcement out there. Is that likely to move it higher or lower? Yeah, it is probably likely to move the price. What I'm worried about in this particular circumstance is the fact that today that price has broken out above a 4-day range where the price of the stock has run into a level of resistance. Now, for those of you who've been in my webcasts, and for those of you who've been in my workshops, you know that my approach to drawing lines of support and resistance, my approach to drawing levels on charts is one that is less 6 significant digits of precision and more Jimmy Buffett's cheeseburger in paradise, not too particular, not too precise approach. So that's why I kind of drew this line discretionarily across there and said, fine, that's my level of resistance. That's where price was changing direction. Now, unfortunately, I can't just tell ThinkScript, look for an area where price is kind of closed in the same area or been in the same area the last 3 or 4 days, and then look for a price break above that. I wish that we could. And perhaps at some point there's going to be a natural language parsing tool that would get us to that ability. And I think there probably is at some point. I know that there are a lot of traders and active traders using ThinkScript and other tools that are parsing that information through large language model type tools, AI type tools, to be able to say, hey, help me find or help me write script to find this. So that's fine. But there's a tool available here in the thinkorswim platform already that can help us to accomplish this process. And it helps us to do that kind of in a visual way. So what I'm going to do, I'm going to put my glasses on so I can see this, but I'm going to go over here to the right-hand side, the top right-hand side of the chart, at the top of the charts tab. And I'm going to go ahead and I'm going to click right here where it says patterns. And I'm going to come down here to select patterns. And this actually was an addition that came in to the thinkorswim platform just a few years ago. And it's one that I've used before, but you have the typical patterns, and those are those typical kind of support and resistance driven price patterns that we can then draw lines on the chart. And each one of those has its kind of associated expectations. Fibonacci's were a more recent add to the mix because of customer demand. But this one, candlesticks, this is where it gets kind of cool. And I happen to notice that each one of these had a little script scroll associated with it. Now, I've got a couple that are custom in here. There's a James Boyd Cahold right there, titled JB Cahold, and others. So each one of these has kind of this scripting attached to it. And so I started to examine and kind of dig into this a little bit. So I said, all right, well, what if we're looking for something like a breakout? And I realized that there aren't, as I look through this, there are not a lot of breakout type candles. There are some breakouts that I've programmed in here. But so I started thinking about this breakaway here. What does that tell us? So I'm going to click on that little question mark icon. And sometimes this HTML loads up and sometimes it doesn't. So sometimes what we've got to do is we've got to go right here to the little script scroll and kind of see what it is that it's telling us that this particular script is looking for. So if we're getting a bullish plot, we're looking for a move above, kind of a gap and a run. So we're looking for a long candle. But again, now I've got to kind of parse that script myself, and I've got to kind of decode that. So what if there were a way to do this on my own, to kind of create what I want to see visually? Because I understand candles. much better than I understand ThinkScript. So I saw this create button down here at the bottom of this list. So I'm going to go candlestick and create. And I'm like, oh, I like this because now this is visual, and I can see visually how I'm putting this together. And for me, having done visual technical analysis for a long time, this is kind of the approach that I like because I can create something that gets to what I want, kind of that not too particular, not too precise. Now, that becomes a bit of a challenge. But the first thing I'm going to do is say, hey, what do I want it to do? What do I want it to show on the chart when the condition exists? So I'm gonna make this a point, or actually, you know what I'm going to use is an up arrow because this is going to be a breakout. And I've got this kind of purple color here. That's a good attention grabbing color. You can use whatever color you want. So I'm going to use a purple up arrow when this circumstance occurs. So I'm going to say, okay, well, what are the conditions that I want to see occur? So what I'm going to do is follow the directions. Click on the plus sign to add a condition for this pattern. So when I click on that, it's like it says, okay, what do you want the first condition to be? What do I want this first set of candles to signify in order to create this pattern? And so I said, well, if I'm using this caterpillar example as kind of my model for all of this, and let me kind of move this out of the way. And remember, in this model, we didn't have, I can't get to that because it's two layers deep. But in this model, I didn't have just green candles. I didn't have just red candles. I could choose up candles or down candles or doji candles. I could choose an ascending trend, so most of those candles being upward or descending. That gives me a lead in. We'll talk a little bit more about that here in just a second. But I came across this where it says mixed candles, kind of getting to the idea of seeing up and down candles. Clicking on mixed candles, now I've got a candle count. And I can choose that candle count. And I can say out of the last 5 candles, so if I wanted to make it 4 candles, I can make it 4 candles. If I want to make it 3 candles, I can make it 3 candles, bars, whatever. I'm going to make this, we're going to start with 4 candles because I had 4 in this particular example, this model that we're looking at. So I want to say, all right, out of the last 4 candles, 4 bars. What do I want to have happen? Do I want to have up candles? Do I want to have down candles? I'm not going to specify, although I could. I could say if I wanted to have 3 out of the last 4 be up candles. Great, cool. So now that I want to see 4 candles going in generally in whatever direction. I'm not specifying a direction, but we're going to talk about them, like I said. That's my first condition. I want to see 4 candles existing in this range. Now, I need to set the next condition. So this is number 1. I'm going to click on the plus sign again. Now I want to see an up candle. Now, if I'm specifying an up candle for my breakout candle, it becomes a challenge if we have a gap up and a sell off. So we're going to address that in here just a second. So the presumption is now, again, going with the caterpillar model that we're looking at, 4 sideways candles and then a breakout. So now visually, I want to see what this is going to be. So you notice if I hover over this group of 4 candles, I've got a C over on this right-hand side of this group. So that's going to tell me where those closing prices are. And if it's a kind of a mixed bag of candles, then that might not be as beneficial because I could have a low close, I could have a high close. Remember, if I'm not specifying all up candles within that group of 4. So if I choose the high, then there's also a risk here because I can have a big just blow off high. But that's probably a little bit more definition in terms of this breakout even than necessarily the closing prices. So let's try both of these. Let's try first moving to a candle, this number 2 candle that opens above the high. So a big blow up, a big breakout. So opens up above the high of the most recent 4 candles. So what I'm going to do is I'm going to take this open and I'm going to draw it to that level right there, to the high of that most recent 4 candle group. And I'm going to say, look, I want to see that that opening price of this next candle, number 2 candle, be greater than or equal to the high of the previous candles. Now, this is something that I didn't notice before, near. And near gives us a little bit of flexibility there. But I want to use this, first of all, and kind of be a little bit more objective, because I really want to use this as the potential for signaling if this, then that. If price breaks above the high of the last 4 candles, then enter the trade, else wait. I don't want to kind of be namby-pamby, wishy-washy about it. So we're going to say greater than or equal to. And so visually, it creates that connector. And you can see what that connector then says. That connector says, and I got to, use my big alligator, little alligator, which one's eating which one. James will appreciate that because we've talked about that. So I want to see price being greater than or equal to the high of those past 4 candles. And again, once the risk exists in this particular case that I get a big blow off high and I have to wait, so I may miss out on that entry. So that's a risk, I think, in this point as we're creating this that I'm willing to take as I'm creating this indicator. So high of number 1 is less than or equal to the open. So it's kind of reverse notation here. The high of this candle or this group of candles is lower than or equal to the open of this number 2 candle. So we're going to stop right here in this mix and look for this type of circumstance and see, first of all, kind of test this to see if this is doing what we want it to do. So what I'm going to do is I'm going to come up here and I'm going to type in the name. So I'm going to do breakout 4 candle _1, so that I know that that's the first iteration of this breakout 4 candle pattern that I'm putting together. And I'm going to click on save. And I'm going to click on apply and OK. And now I'm going to go back to my chart and I'm going to look for those circumstances that would tell us that that condition is met. Now, it's not meeting this particular condition right here. And I knew that that was going to be the case. You see where I've got those pink arrows or purple magenta arrows, whatever that color is. So at the moment, this doesn't meet that characteristic. And I knew that because I knew that I had these 2 little highs in here amongst those candles. And remember, I measured to the high of the past 4 candles. So visually, this is what I was looking for. If these were the highs, I was looking for an opening price that was greater than that level right there. And I didn't have that in this particular breakout. But if I come back here and I say, where's my opening price? And was that higher than the highs of the last 4 candles? The answer is yes, in this particular case, in this case right here. So this candle right here would have been a positive indication based on this particular signal. This candle right here would have been a positive indication based on that high of the last 4 days. This candle would have been a positive indication. So I had 1, 2, 3 breakouts in a row in this pattern. Yeah, exactly. Salient Joe. We're looking for the previous 4 candles, what their high was, regardless of whether they were bullish or bearish. And then the key is the 5th candle in our pattern opens above the high, not of the 4th candle, but the high of those 4 candles. The high of those 4 candles. So that's why this one didn't get it. but this one did. So here's the high of our four previous candles, but we didn't get an open above that high. So you can kind of see how that logic is now making sense. Great question to ask. And I'm glad that you asked that. And that's a good way to kind of walk through this and say, wait a second, are we looking for the high of the fourth candle, or are we looking for the high within those four candles? And we're looking for the high. That's why we grouped those together. We're looking for the high of those last four candles. Cool, because that tells us not just the individual discrete high, but the range. Because remember, we're looking for that kind of weekly, and then we get the blow off. And oftentimes it'll happen on a Friday or on some kind of news event or something like that. And so you'll see that type of pattern present itself. So if we zoom back out on this particular chart, I can see that, wow, this is when this stock is trending, it has a tendency to make that breakout above the those four candles. And if we were to look at something else, I'm just going to go back to another chart within this list that's currently seeing a breakout. Let's take one of the two that I talked about, Meta and Microsoft, that had earnings announcements last night. And let's go up here to our chart and let's put in Meta. So we know Meta had a breakout. And we've got our breakout candle pattern here. And so here's the question. I mean, here's the high of the last 4 days. Here's our open. We should be seeing that perspective. We should be seeing that indicator here, right? So why aren't we? That remains to be the question in this particular case. Let's take a look at MSFT and see if we're seeing that candle indication here. Yeah, so we're going to get to that, Salient Joe, here in terms of that, using that in a scan. Now, Isaiah, in terms of utilizing this with Heiken Ashi candles, that would have to be scripted, right? A little more fully. So I'm looking at this, I'm saying, look, on these gap up sell-offs, oh, now I realize why I'm not seeing that. Now I'm realizing why I'm not seeing that. So let's talk about why. So if I come up here to the price patterns and I click on select patterns again, now I see this breakout 4 candle script. And if I click on the little script scroll there, I'm seeing this visually now. I see what's going on, because my requirement for this particular candle was an up candle. Oh, so if I have to have an up candle, because remember I'm saying the up candle is going to be, number 2 is going to be an up candle. What if I said if it was just a mixed candle for number 2, right? Or I think maybe there's a better way to define that. It could be a doji, it could be mixed candle. Okay, but here's what we'd have to do then, is come back and say 1 candle and click on save. Now we should be able to see that perspective. Now that's the problem, because that just totally broke our script. Okay, so let's come back here and let's do this again. What we don't have here is our connector information, so we've got to redo our connector information. So we got to take that open, we got to draw that to the high, and we got to say greater than or equal to. So we want to say any of those candles, if that opening price is greater than the high of the previous 4, all we're doing is we're fleshing out this script. So now what I'm going to do is I'm going to say, all right, let's make this breakout 4 candle 2. This is iteration number 2. And we're going to click on save, and we're going to click on apply and okay. And now we've captured that gap up sell off, because what we've done is we've allowed the script to capture any type of candle, up or down candle, green or red candle, that opens higher than the high of the past 4 candles. Oh, you see why this is kind of an iterative process when you do it this way? It's always a good idea to come back and test and see what's going on with that scan. So as we put this together, that's the process of finding and building visually this script that works. So we're going to go back here to patterns, and we're going to say, all right, select patterns. Now, if I wanted to come back here and I wanted to say, hey, what if I wanted to make this more bullish? What if I wanted to make this a more bullish perspective? Well, could I change these 4 candles and say, look, I want to see a breakout above a recent uptrend. So I can say, look, I want those 4 candles to be in an ascending trend of 5 candles, 4 or 5 candles. Let's make it 4 candles. And once again, we can create that. Actually, we can't. So now what we're going to do is we're going to say, all right, we're going to just redo this script. So I want 4 candles up. I want an ascending trend of 4 candles. Now I want to change this one to 4 candles, mixed candles. And I want to add one more condition. And I want to say mixed candle, 1 candle trend. And I want to connect this open to the high of those 4 candles greater than or equal to. So I want to have an ascending trend coming in. That's our first condition. Mixed candle. So that's going to give me the idea that maybe this is in a short to intermediate term uptrend. Then we want to have our mixed candles, the next 4 candles, creating that high. And then our condition is getting in when whatever candle color it is has an opening price above or equal to the high of the previous 4 candles. So this is now iteration number 3. And we're going to click on save and apply and OK. So now what I'm looking for is an ascending trend coming in and the breakout above the high. So I'm putting some conditions on this, putting some conditions in this structure. So now, if that's the case, now that I've got this perspective, let's go back and let's just double check this against one of these other breakout indicators, and let's see if this works. And I know that I've got some here that are loading in. Let's see if I can just grab one out of this mix. It takes a little while. Now, here's the thing. The more you know this by now, the more scans that you are using, or the more scripts that you are using within a watch list or within a scan tool or on your chart, the slower the data is going to update. So let's take Vistra, VST, and let's look at the chart. And we have that current condition. Uptrend, it opened above the high, and we get this gap up and a little bit of a sell-off. All right, that's cool. I like that. So that gives me that perspective that it's doing what I want it to do. It's giving me something that is useful in this approach. So now, how would we use this breakout 4 candle third iteration tool? That the name is irrelevant. We can call it whatever we want. You call it whatever. You call it a blue dolphin. How would we build this into a scan now? So what I'm going to do is I'm going to come here to the scan tab. And here's my bull flag scan. I'm going to just reload these. We'll just build this from scratch. So I'm going to reset this scan tool. And I'm just going to give it a couple of things. I'm going to take off their net change. I'm going to take off percentage change. I'm just going to give it a volume filter of about 1 million shares. And the only reason I do that is just simply to kind of get me in the somewhat narrowed down ballpark. Then I'm going to add a filter. Now, this is the difference, and I'm going to point this out. I pointed this out before. paperMoney will not allow the use of studies in a scan. So you got to do this in your live account. But buyer beware. All right? Properly warned ye be, says I, in this case, because you're doing it in your live account. So we're going to go to study. Actually, we can do it now. We can do it this way. We can add that filter and we can look for a pattern. So the pattern that we might search for, actually, in this particular case, if we click on edit, that's the primrose path that I went down the first time. So what I'm going to do is I'm going to come in here and I'm going to say add filter and add study. And now what we're going to do is we're going to add a study. Now, it's not in the bullish and bearish. It's not in bearish only candlestick patterns. It's not in bullish only candlestick patterns because it's one that we've created. Now, there are some in here. High price gapping play is probably pretty close, but we've kind of built this ourselves. So what I'm going to do is I'm going to come down here to custom. And when I come down here to custom, I get another dialog box. And what I'm going to do is I'm going to say edit, and we're going to put in here our custom study, which was the one that we built, which is our breakout 4 candle. And we want to say is true within 1 bar. And we're going to click on save. And we're going to click on OK. And now what we've done is we've created that filter. And so now we're going to run this scan and we're going to see if we have found any of those that are true. So let's just pick one on the list to see one that meets that particular characteristic. Let's pick eBay. That's the first one on the list that I recognized. We'll come over here. We'll do EBAY. And there we go. We've got that uptrend, 4 candles, boom, gap up and rally. So this is a user-defined scan that has given us the ability to take something that we built on our own and apply it in a scan. So I'm going to share this with you. So let me do this. I'm going to pop out here to patterns. And again, properly warned you be. But the way that we're going to share this is I'm going to click on that script scroll. There's our visual. It's the breakout 4 candle 3rd iteration here. Click on share. And I'm going to click on share and I'm going to send it here. Now, again, remember, to James's point, James put the directions out there in the chat. And for those of you that are watching this in the recorded version, I will put this in the description as well. But you have to name it something, and then in order to put it in a watch list or to put it into a study or to a scan, you've then got to incorporate it into the scan. So here's what I'm going to do. I'm going to do this, Control V. Again, remember, these are not guaranteed as to time or accuracy. And there you've got it right here. So here's how I brought it into the scan. Let me walk through that again with the time that we've got. I'm going to cancel that. So let's go back to our scan and we'll kind of walk through that again. So I'll kill that once again. And if I just scan, there's all of my results that meet that particular condition, better than 1 million shares in volume today. Then what I did is I added a filter and I added a study filter. And again, the reminder, this has to be done to add a study filter has to be done in a live account, not in paperMoney. This is a paperMoney account. I assure you, it is set up as a demonstration account so that it behaves as if it were a live account. So now what I'm going to do is I'm going to choose a study, but it's not one of these already pre-built. Now I could go here to custom and I could bring it in that way, but it also, now that I've saved it, falls under user-defined patterns. User-defined patterns. And it is right here, breakout candle, breakout 4 candle 3. That's the study I'm using. Click and click OK. Now, the challenge is, if I want that to be the case, I have to come in here and I have to edit this study. I'm going to click on the little pencil icon right here. It's going to bring up that study editor, and it's going to say, if this condition is met, but if I wanted to determine what that condition is, because right now I don't know what that condition is, click on edit, and I want to say, all right, breakout candle, if that little pink triangle, that pink arrow that we put on there, pointing out that this condition is met, is true, meaning that exists right now within one bar. That's going to be today. That's going to show me that I've got that breakout occurring today. That breakout 4 candle occurring today is true within one bar. If I wanted to come back a little bit within 3 bars, I could do that. I could look for that occurrence in the past, but that's what I've done. Breakout candle is true, so that value is true, and I'm going to click on save, and I'm going to click on OK. So now you see that it fills in the condition. Breakout candle is true. Click on OK. Click on OK here. Now that condition is met. And I'm going to click on scan. So now all of these results that show up in this watch list or in this list of results should be meeting these 2 conditions in the scan. That it's got 1 million shares currently traded, at least, and this particular condition, breakout 4 candle, iteration 3, is true within 1 candle. So that's the condition that we've built. And now I can save this as a watch list. You can save that as a scan. You can do all the things that you can do with scans. But what we've done is we've created a circumstance where we've been able to visually create a ThinkScript based on what I wanted to see with a candle. Now that you've seen the model, take this and run with it. Use this methodology if you want to build your own script visually. And that's an effective tool to be able to do that. I've built in previous iterations of this webcast bull flag type patterns. You can get as creative as you want with that visual identification. So if you want to learn more about ThinkScripting, a couple of great places to do that. Come over here to the Trader Talks webcast page on YouTube. When you do that, click on subscribe if you haven't already. You can also click on the subscribe button down there at the bottom of the page that you're seeing on the screen right now. If you're watching this in the live version, click on that button down at the bottom of the page. If not, come over here, type in the word ThinkScript, and that's going to get you to the playlist for the ThinkScript webcast. It's going to get you to individual webcasts within that, and you see there's Michael Fairborn teaching a bunch of those. So that's what we've done so far today, guys. Once again, my thanks to James Boyd. My thanks to all of you for helping out today. My thanks to our great producers for bringing this webcast to you, and to our great review staff for keeping an eye on things as well. Guys, I'm going to be back tomorrow doing stuff, but I think James is up a little bit later. I think we've got one more webcast coming up today. Have a great day, everybody. We will see you again very soon. Take care. Bye-bye.